Back in 1988, when I was running my first business, I thought I was doing pretty well. I had my bright red Porsche out in the front just to show everyone how successful I was. But that didn't show the full picture because the business I was in required a ton of cash. I had to hold a lot of stock and give payment terms to my customers, which meant that in order for the business to grow, I had to continually leave profits in the business. Now, that's not ideal when you're in your 20s and you want to buy apartments and flash cars and generally just live the life. And the problem was, all of my friends were employed by large companies, so they got to spend everything they earned, whereas I didn't get to see the money that I was earning. So I did what any owner of a small business did at the time, and I ran an overdraft so that I could pull the net profit out of the business and spend it on investments like a pension scheme or an apartment and, of course, a nice Porsche. And it was easy because the bank manager would take me out to lunch and just tell me how good of a businessman I was. And I got to be honest, I'm embarrassed to even think about it now. However, everything changed in the summer of 1988 when a new bank manager took over at the local branch of the HSBC, and he wasn't so impressed with my business acumen. And I remember the day that he came to see me in my warehouse and asked to see the financials. So I printed out the profit and loss report and a balance sheet for him. I had no idea what he was looking at, but I was just pleased with myself because I was able to print out what he was asking for. In my mind, I was a computer genius because I used accounting software. I thought I was just so far ahead of my time. How could he be anything other than impressed? But unfortunately, he wasn't impressed at all because when he looked at the balance sheet, there was just £15,000 of equity to support a business with a revenue of over £1.5 million. The entire business was being propped up by the bank's overdraft, and they could pull that facility anytime that they wanted. And he said to me, "We're not here to fund your lifestyle." Now, I couldn't believe what I was hearing because I was the customer here and I was a good one. I paid interest, I paid bank fees, and I had £150,000 worth of stock sitting in my warehouse. I was successful, or so I thought. But the man from the HSBC, he quickly brought me down to earth. He said, "I don't like what I'm seeing here, £150,000 overdraft. The bank is very exposed." He said to me, "What do you think will happen when interest rates go up?" Now, I just shrugged my shoulders because interest rates at that point were already 10%, so they couldn't go up much more, surely. He said, "I'm only going to be offering you a facility that is 50% of the retained equity in the business going forward." I mean, seriously, in one meeting, he was going to effectively close down my business. And he could, because he was the one funding it. By ripping out the profits and relying on the bank for finance, I'd effectively given him control of my future. Now, what followed was a bit of backtracking and a bit of begging, but he did agree to give me a sporting chance and to save my business. It would require a 12-month financial plan supported by monthly reports delivered in person to his office, covering up-to-date profit and loss and balance sheet reports. He was going to take a fixed and floating charge over both my stock and my debtors, which meant he would be following the numbers very closely. Now, I knew he was serious, and at any moment he could pull the pin and effectively end my business. So I had to learn quickly. And I immediately went out and bought two books, Accounting for Non-Accountants and Accounts Demystified. Now, weirdly enough, I really enjoyed reading them. It was about double entry bookkeeping, creditors and debtors, assets and liabilities, sales cycles. It was fascinating and I loved it. And once I knew what he was talking about, I went to work and produced a detailed plan for the year ahead. Revenue, cost of sales, and every single expense was all budgeted for. Now, the thing is, I was no longer in charge of my own business. I was effectively reporting to a manager each month and giving him a full report on what was going on inside my company. And I loved it because it gave me a level of accountability that I'd never experienced before in business. And as interest rates rose from 10% to over 17% in the next few months, I can honestly say he saved my business. Now, one interesting thing happened at the end of that 12-month period. I delivered on what I said I would in terms of revenue and retained net profit. And in return, the overdraft was set at 100% rather than 50% as he originally wanted, due to the significant reduction in risk to the bank. And although he still expected that ratio to reduce in the next 12 months, which is fine by me because I wasn't too keen on paying 17% interest any longer, but it was the forecast versus actual expenses that got me really excited. I remember sending him a fax because that was how we emailed or sent a text back in the day. And I sent him a message and I said to him, "Did you see how close I got to the forecast? 0.1%. I thought that was amazing because I'd forecasted a number 12 months earlier and I'd well and truly nailed it. I thought he'd be so impressed with my business skills, but all he said was, "Yes, I did." Now, I never really liked that bank manager as much as the previous one who used to take me out to Chinese restaurants for lunch, but he has probably been the most influential person in my business career. And he's helped to shape the way that I do business planning to this very day. Now, right now, I want to help you to steer your building company through the troubled waters ahead. And you need to start by getting your financials bang up to date as of the end of last month. So before you do anything else, you need a very clear picture of the current financial health of your building company. Now, don't rely on your accountant. This is something every single builder can and must do themselves. And once you have that in place, sit down with your key stakeholders in the business and perform a SWOT analysis. This is where you look at your strengths, weaknesses, opportunities, and threats. Now, your team will help you to uncover any blind spots that may be in your business. Once you have an updated picture of the current financial position of your building company and have performed a SWOT analysis, it's time to plan the next 12 months. If you've already done this, then it's time to review the plan in light of the current situation, which is very fluid and changing rapidly, which means you will be reviewing and updating your plan on a much more regular basis than you would normally do. So create a plan, assign tasks, and then execute the plan. And if you need help with getting your building company through the next 12 months without running out of cash and preparing for the inevitable boom that all of the pent-up demand will create, then we've created a step-by-step action plan especially for you. So click on the link below to access it for free.